Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Monday, January 25th. Okay, guys, hope you had a good weekend. Hope you found time to recharge your batteries and get ready for a busy week. I have put the economic calendar into today's blog post. Headlining the week is the FOMC meeting that starts tomorrow with an announcement on Wednesday. At 2 p.m. is the written release, and then Jay Powell has his presser that starts at 2:30. Remember, the kind of the market posture in front of these FOMC meetings, especially starting tomorrow, is more or less a slow grind or drift higher into the print. And then, you get an expanding volatility on the release of the notes. Now, as has been the case recently, there's expected to be no changes. But that doesn't stop the market from moving around, especially when Powell starts talking. And I don't know what it is, but it always seems like the market fades while he's talking. No matter what he says, the market seems to sell off. I can't remember one time where it did well or ripped based on his comments in the presser. So we'll have to watch that. There's also some other economic data. We've got GDP this week. That's back half. There's some other stuff there, but you'll see it on the blog post. So take a look at that. So let's get into the charts here. Starting with the SPY 2-hour. What I did was if you've been following along closely, you'll notice I dropped in a set of channel lines for SPY on the 2-hour with a midpoint approximation line that comes up here that captures quite a bit of reactions, especially down in here. So right now we're at the midpoint of the rising channel. Futures are green this morning, but not markedly so. From what I can tell, or just judging this as we sit here now, I think you can be long against 383 with a breakout above 385 as being a location to buy. That will be an all-time high. Then if you had gotten long early or earlier, at lower levels, then if we can take out 385, that would be a point to roll up your strikes, move up your stops, and then continue to shoot long against this 385. Now, a warning sign would come if we lost the midpoint of the channel right here at 383, because then you'd be on the wrong side of the midpoint, and those often act as support and resistance, by the way. And then, I think the averages would be vulnerable to rolling down to 384 and possibly even filling this gap, which would bring us down to the bottom of the channel as well. So that's probably not a coincidence that gap is right in there towards the bottom of the channel. That would be a place where, if we did roll down that far, that would be a place where you would want to try a long. We're in an up channel at the bottom of the range at support. So this 379, 378 area would be a place to try a long for a bounce here. But then below 378, I think you got to switch gears, because I think that would portend, a deeper pullback. Now, on the indicators, we came down, reset PPO near the 0 line, got the bullish cross, which is great. We've gone up, but now momentum has been waning a little bit. What you want to see here, if you're a bull, is what's called a bull kiss, where this comes down, touches the signal line, and then moves back up. If this were to do a full-fledged rollover and then come back down towards the 0 line with RSI coming down as well, then you'd most likely see price lose this midpoint and then come down here. So always, be aware of the posture of the indicators. That can be really helpful when you're trying to assess, do I want to go in, and how you want to approach your trades, depending on how those indicators are postured. Now on the 30-minute chart, we've got this little trading range here between 381 and 385, with again the same 383 support line here. So today we're going to open up a little bit. If that, I think it's up about 0.3%. So we're going to open, between 383 and 385. If you're a tactical active trader, wait till price hits one of these objective levels, whether it's moving up here to 385 and stalling and then moving back down, or breaking out, or losing this 383 where it would favor rolling down to 381. I view 383 is the active trader pivot. So if you're, working these shorter time frames, I think you can be bullish above, and I think you can be tactically short below, and even to the point of, if things start falling apart, to fill this open gap down here. But I don't anticipate that in front of the Fed. I think we're going to be in a flat to generally higher tape into that Fed meeting. So I would be surprised if we rolled down here to fill that gap, a big move like that on, here in front of the Fed. I mean, you got to trust the levels. If they break, you got to be short. But I would be looking for long entries on any kind of pullback into these areas. Let's move on to the Qs. Excuse me. Now the Qs are up nearly 1% in the pre-market, and that's going to dovetail into what happened on Friday. Actually, Thursday and Friday, we've had a big igniting move in the FATMAAN names. The Facebook, Apple, Tesla, Microsoft, Amazon, Netflix, Google, all those names are really seeing some strength. And that has picked up again this morning, with the Qs being up about 1%. So let's take a look at it. We've had this rising channel on the 2-hour, and that's been in place for quite a while. And now we've jumped outside on the top end of the channel, and now we're up 1% here in the pre-market. I think you can use the top of this channel as a support line going up. I think as long as you can stay above this channel, I think you can be bullish. If we were to drop below, at any point in the near future, I think it's certainly susceptible to rolling down to the midpoint, which is, what is that? $4.50 down here to 322. So use this channel line as support. We're going to open higher by 1%. Whenever there's a gap open, remember about the possibility of a flash gap fill lower, where they dive it right off the bell, try to go down and fill that gap, and then reverse it. So watch that this morning. And if you got that gap fill, say it opens up here at 3:30, and then it does a dive down here, that's your place where you want to try along after the gap fills. So if you're ultra nimble, you can try to, play that down move if you get it, but then be looking to cover after the gap is filled and reversing your position and going long. 30-minute chart, kind of see it here where we've had this pretty narrow consolidation range. We've had momentum coming down. We've had RSI coming down. But now this morning, we're up 1%, and I believe we are above this consolidation range. So that will be helpful if, price comes back down to try and fill that gap. I would be covering in this 325.50 area. Let's see. 325.42 was the close on Friday, and that would, of course, close the gap if they did a nosedive kamikaze move off the open. Then you can be long against 325 with your stop just below and look for them to reverse it. And you would see the momentum start curling up and RSI curling up as well. IWM. I showed on the Weekend Navigator, and if you're new to the site or missed it, that blog post is posted, where we showed IWM how far and extended it is on the weekly chart. That being said, it has not rolled over yet, so there are no sell signals. So we may see a period of underperformance out of IWM, while the moving averages catch up, but it may not roll over. So we had a little dip on Friday, but then it bounced right up into the channel. I think you can be long against 215, and your target will be up towards 220. This may keep going for a while. Just be ready and know that it's overextended. And when we start seeing, channels and trend lines break, then we'll know to either be cautious, exit our longs, or even go short if the technicals dictate that. Because as I pointed out on the weekend, even a 38% Fibonacci retracement, which is nothing, is like $25. It is really extended. So keep that in mind. Here we've got price right at the top of the prior range. If it can pop 215, you can get long against it with a stop below. I think that would be fine, and see if we can get a further lift into the FOMC meeting. Let's move into the mega cap tech FATMAAN names. Big igniting move off of this low we had last week. We had a big igniting candle on Friday, but then they faded it into 274. I think 274 is your pivot. I looked pre-market, and it's up about $4. Up here in the 279 area, Of course, there'll be that gap below that will need to get filled, but look for a long entry on Facebook. I think they report Wednesday after the bell. You may see these names continue to run into their earnings. So don't set aside the possibility of some very nice gains in a very short period of time. We've got 3 days. How I would play this today? So they open it at 279, right? If they do a nosedive to fill the gap, look to get long at 274. I think that holds right here, which is the Friday close. That would be a gift, a nice entry point, 274. I would get weekly options that expire Friday, unless you're going to hold through earnings, and then you can, get whatever you want. But if you're going to exit before earnings, why pay for extra time? So, anyways, the other buy point is going to be on a recapture of 280, in which case your target is going to be 284. So if they push it down, I'd be a buyer at 274. I would be a buyer on a recapture of 280, and I'd be looking for 284 and possibly more heading into earnings on Wednesday after the bell. Apple. We got a breakout on Apple. Nice move to take out this prior all-time high. And now we're sitting above support up in this 139.50 area. I would be a buyer of Apple on any pull-in to 138. I did not check and see, how much it may be up or what's going on this morning with it. But we're in blue sky country now. Everybody that ever bought Apple in their whole life, if they still hold it, they're profitable. Even the people that, bought right here and held through this pain is now profitable. So there's no natural sellers. Don't discount what this might do heading into earnings, okay? So if you got a pullback into 138, I'd be a buyer there with a stop just below and see if we can get a push higher. Tesla's in consolidation after this really strong move at the end of the year. If I was bullish, if I had a position, I wouldn't want to see price lose 830, because then you're looking at 805 down at the bottom of the box. If I didn't have a position and you got that move down to 805, I would definitely be a buyer there. I would be a buyer even at 830 with a stop below and say, you know what, if you take me out, I'll take that paper cut. I think 830 holds, and I think there's a good chance that this gap fills before earnings on Wednesday after the bell. I believe that's when they report. But take a look at that. Or it may just drift around waiting for that report. You just have to wait and see. I'm not involved in Tesla right now. So I think you can be long against 830. If you get a move into this gap at 855, I'd be a buyer there and then look for a push to 880. And I would be cautious below 830. Microsoft has broken out of this $20 wide balance area and is flirting with this all-time high back here, daily chart, back here of 230. And I looked pre-market. I think it's trading like 229, I would be a buyer on a breakout above 230. Jump over to the 60-minute chart. You can see it here. There is support here on the 60-minute chart at 226. They're going to open it near 229. If they did that kamikaze move to come down here and fill the gap, be ready. Buy that at 226 with a stop just below and see if they can run it back up to 230 and ultimately take that out ahead of earnings and pop out to a new high heading into the print, which I believe is Wednesday or Thursday. You got to check that. But I would be a buyer at 226. If it rolls below 226, then it's probably going to roll down here to 222.50, and then the pre-earnings run idea is pretty much killed if that happens. So price has got to hold 226 and then break out above 230 for this to run into earnings. Amazon daily chart, downtrend resistance. We're right there. So if price can pop this 330, then it can get a run to 33.50 and then up to 34.50. Here's the 60-minute chart. Big open. I think this was Thursday. Then they pulled it back to 3,300. Notice that there is a little gap in here that I did not include. Didn't look at it pre-market. I think you can be bullish above, at 3,300 or higher. Be a buyer. Be a buyer at 33.40. If that level is reclaimed and taken out, then you got a lot of room to run above. If for any reason 3,300 fails, I would just see where it settles in at this 32.50 area. That's the free 50 club. Every $50 there's support and resistance. If you wanted to try a tactical short and you were feeling emboldened and you got that breakdown, you'd probably find 32.50, but I would be covering your short there. I think that's going to hold, and then I think they reverse it. But I think mega cap tech is starting to feel it. I think the reflation trade went a little bit too far, a little bit too fast, and now ahead of earnings, after seeing what Netflix did with their earnings, I think traders want to be long FANG heading into their earnings this week. So setting aside any, flash gap fills lower, I'd be a buyer at these levels. I'd be a buyer at 3,300. I would be a buyer at 32.50 if it fell that far. And I'd be a buyer on a breakout above 33.40 as well. Google. To me, this is the best. This is the best chart. Although Apple does have a good chart. I mean, all-time highs are bullish. But as I discussed over the weekend, Google has broken out here and does not have any bearish divergence on the daily chart at all, whereas the other ones do. Working in this flag between 1880 and say 1930. If you got a little pull in to 1880, I would be a buyer there. I think it holds that. I think Google has broken out. If you look at the weekly chart, you'll see clear as day that weekly bull flag breakout that points to 2200 as a target. And I want to be looking for long entries on Google. I don't think they report this week. I think it's next week, but please check that. I would not be surprised if this makes a move ahead of earnings. So I would be a buyer at 1880. If it jumps 1900, I think you can buy there as well. Just have to see how the opening goes, but just remember the basic rules. Buy at support, buy on a recapture of an identified level on the way up, and then as you move up your stops to protect those gains on any kind of backtrack. Netflix. Here was the big gap higher on earnings. Now it's consolidating. I think you can be long against 560. Here's the 60-minute exploded view. In all actuality, anything above this gap keeps the chart bullish. So I think you can be a buyer on any weakness in here as this consolidates. But I think this is going higher over time. It's just a matter of tactics and when and where you can get in. I would be a buyer at the top of the gap for sure, with a stop just below. I would be a buyer on any move back up above 565 or 570 with a stop just below. You've got a big VOP level right here at 570. And once you get above that, then I think it gets easier for a move higher. The measured move for Netflix is up at 660 or higher. So I think there's room to run on this to the upside, and we'll just have to see, how long it takes to consolidate before it takes that leg higher. Now, I want to hit three names that there were in my option screening software flagged a buy on Snap on Friday. And looking at the chart, first of all, we had an impulsive move back in October. That was probably off of earnings, with a bull flag breakout that measures to 62. Now we've had a move higher and a further consolidation. So a breakout from this $6 wide consolidation, 48 to 54, points to 60. So we've got two technical setups that both point towards 60 to 62 as an upside target. So what I'd like you to do is alarm 54 and get long on a break above, and then look for 60 to 62 on a measured move basis up here. I have not looked at earnings. I believe they're February 5th, but I'm not sure. But I think there is time to participate in some upside before the print. So I like that play of getting long Snap on a breakout. Palantir, massive candle on Friday. What was that? Up 25%. There were a ton of long calls bought in the name as well. I mean, when you get a candle like that, everybody and their brother wants to be long, right? For us, or for people who aren't in it, I think you can get long against 32 on any kind of move above. So what you can do is, set your alarm here pre-market. I don't know where it's at, but if you got any kind of a move outside the box and then like a pullback into 32, I think you can get long there with a stop just below and treat this whole thing like a massive bull flag. Here's the impulsive move higher. Here's the flag, and on a measured move basis, I mean, that's way up there. That's in the 50s, if I got this kind of figured right. So check your earnings date, but a lot of premium was bought on Friday. So there's a lot of institutional money that thinks this is going higher. JMIA, the Amazon of Africa, big impulsive move on Friday. We were ready with an alarm right here at 49, 48. We got long. We're in the February 55s. JMIA reports after the February expiration. So obviously what we're hoping for is for this to run into earnings and take it higher. If you're not in and you got some kind of pullback to either half of this candle or back into 50, I think that's a good buy there. And if you got that, I think you would be lucky. I don't think it's going to look back particularly long on this impulsive move from Friday. I'm talking my book. I'm hoping and wishing, but I think this is going to run. Got a bull cross working here on momentum. We've got an RSI breakout moving back above 70. That's showing strength, and I'd like to think that this just goes from here. So if you're not in, kind of pick a spot. That's about all you can do. One way to do that is, the top of today's candle. If you get a breakout above Friday's high or Friday's close, and you get long, just set your stop just below Friday's close. And if it comes back, you'll get stopped. But otherwise, if you really wanted to get into the name, that's a way you could do it. So, all right. A lot of stuff going on this week. Like I said earlier, I think the reflation trade takes a pause. I think IWM drifts higher or consolidates sideways while this reflation value pause is happening. That will overall be a positive development because that will give a chance for these, overbought momentum indicators. It'll give a chance for the moving averages to catch up with price so they're not as overextended as they are now. I think money is flowing back into mega cap tech, and we'll have to see if that's a persistent move, after earnings, if there's follow through. And this, these names have been consolidating for 5 and 6 months, right? It's been choppy trading. I mean, we've done all right, but it's not like sitting in an uptrend where you don't have to do anything. The last 6 months has been hand-to-hand combat in these trading ranges. And, one thing's for sure, hard trading is followed by easier trading. What do I mean by that? Hard trading is when you're in a narrow range or a trading area that's chopping back and forth, long today, short tomorrow, that kind of thing. But once you break out, then that's easier trading. If you catch the breakout, you'll get that more unidirectional move, and we're right on the verge of that on mega cap tech. I mean, Microsoft is right there. Apple is already there. Facebook is strong. Google is already there. All-time highs and looking for more. Let's see. What are the other names? Netflix is already there. All-time highs, looking for more. So, I mean, all-time highs are bullish. They're not bearish. So we are right near support on a bunch of those names. So now would be the time, once you get the technical signal, the breakout, to get long against these big consolidation ranges where that all now becomes support. And then you can sit in your position a lot more easily than you could, while we were trading in the chop zone. So look forward to that. And then, of course, remember Jay Powell on Wednesday with the announcement. So, and also remember, first move on the FOMC is always fake. Not always, but a lot of times it's fake. So when you get that knee-jerk lower, when Powell's talking, it's fake. Look for a place to get long or just step aside and let it stabilize. Very rarely is that first algo move correct on the FOMC. So keep that in the back of your mind. You may get a gift handed to you on a silver platter if these machines think they see something and jack it lower and then figure out that it was a head fake, and then they want to take it back up to where they were. So put that in the back of your mind. Okay, hey, if you're new here and you like what you've heard, please hit the subscribe button and the alarm bell. You'll get notified of all my content. And then jump over to the show notes where there are links to the blog site where there's more information, more detail. I've got some interesting stuff on today's blog post that I didn't cover in the video. And there's also a place to register for my content where you'll get everything that I do in an email, so you won't miss a thing. And we'd be glad to have you. And if you do that, you'll get an invite to the trading room that's becoming more and more dynamic with active traders working hard to improve, helping each other out. And I'm really enjoying that room more and more as more people discover it, and the camaraderie between aspiring traders grows. It's a safe place. We help each other when we get knocked down. We congratulate each other on our wins, and that's the way it's got to be. So I hope you take advantage of that and register, and I'll shoot you an invite link. So have a good start to the trading week. This has been Chris Buss with Traders Profit Compass. Talk to you soon.